Good evening, everybody. I guess evening. We're so used to doing these in the evening. This is actually Saturday morning. Good morning, everybody. Welcome out to our training webinar that we hold here occasionally. My name is Ferre. I think I've got Stephen Swenson online. You can hear us okay?
Yeah, I can hear you great. Glad to be here this morning and go over tax lien and deed investing and talk about some of the opportunities that are taking place.
Excellent, excellent. Okay, well, so everybody knows if you haven't been to these before, we always record them, so you'll be able to watch a replay later if you want. We'll cover a lot of different information here today. We wanted to talk about tax lien and tax deed investing. We also want to talk about what we call the new foreclosure opportunity. So we understand that everybody here is coming from different degrees of experience and that everybody's in a different place. I think what we'd like to get across is what we see as our vision of what's happening right now based on the last 20 years of research that we've been doing. So if there are people here that haven't been on webinars before with us, I'm assuming that most people have. Most people, I think, have attended different trainings we've done in the past, or they've watched videos that we have online that are free, and that often drives them to us for these events. But if you're new to us, we can explain a little bit about who we are before we dive into the training side of it. And if you want, Steve, you can go ahead and tell them who we are a little bit, and I'll take the next slide.
Yeah, no, not a problem. I mean, as far as us first getting started, we attended our first tax sale back in 1999, 2000, and that was the first time that we got a chance to really understand what tax lien and deeds were. I was a brand new real estate agent, and my broker invited me to come out and attend the tax sale, the local tax sale. And I knew what foreclosures was. I was involved in real estate as a brand new real estate agent, but that was really kind of the first step of attending a tax sale and saying, what is this strategy? How does this work? And really from there, we started working with different seminar companies and training companies as we learned about tax lien and deeds. But really for a period of about 6-7 years, really me and Shade spent time researching and understanding and figuring out how tax sale investing works. Because when we first got started, there wasn't there the training materials out there that we tried to find this information from. It wasn't very well organized, it wasn't very well written, and it was hard to understand. In fact, a lot of times we would try to read some of these training programs and essentially get more confused. And so what we ended up doing was going to the county records and really understanding how this works. And so in 2007 we started our own company, and essentially we worked directly with the seminar companies. We provided them with their programs, their materials, their seminars, and we were kind of a company that worked directly with the seminar companies to provide them with tax sale training. And so we did that until about a year ago. And so that was kind of exactly what we did, is we worked directly with these seminar companies, and we worked with students all across the country. We worked with students in every single state, through many of the countries throughout the world as well. And then in 2016, we really decided to quit working with the seminar companies and just start doing, essentially offering any training that we have directly to the public through our own website. We didn't want to be, burdened with having to deal with the seminar companies. And a lot kind of changed throughout that time with the seminar companies as well, where we didn't feel like we could truly give the product that we wanted to the students that they were the programs that they were offering to their investors and students that attended the seminars.
Yeah, I think for everybody that's here, we essentially started the same way that most of you are trying to start, only when we started with it, there was just a lot less information. I wish we could have found the kind of information that we provide now, because it just wasn't there. And part of the reason why it wasn't there was because people hadn't figured it out yet. That might seem kind of crazy, but there are 50 different states, and every state has their own state laws that govern property taxation. And I think what had happened was there was just no correlating between different states, and there was not any kind of there wasn't a system that oversaw all of that. So it was just up to investors to figure out how things worked from place to place, and that was where that was really our starting point. It was trying to figure out how the system worked, and then trying to figure out a way to teach and explain that in a way that made sense to people. And uh, like Steve mentioned, doing this on our own, we enjoy quite a bit more than any of the time that we spent with the seminars because, face it, the seminar companies are charging a ton of money for this stuff. They charge a ridiculous amount for the training, and part of that is somewhat justified because they hold these events and they spend a ton of money trying to get people to come out to the events. But what it does is it jacks up the price of the training, when in reality, the portion of what people are paying that actually goes to the training side is ridiculous. You know, it's 5 or 10% of what you're actually paying. So you pay for a $20,000 package, and you're probably actually getting about less than $2,000 worth of actual training. So, you know, the what we learned from that was that we could provide the training a lot cheaper for people. You know, it doesn't have to cost a lot of money, and you know, since that time, well, one of the things that happened while we provided a lot of different training was that people took our training and copied it, and it's now integral, I think, to a lot of the training that we see out there now. And our viewpoint and perspective has changed on it, in that we don't think people should have to pay a lot of money. In fact, um, you know, we'd like to teach people how to invest, and so that they can take the money that they have and use that to invest rather than to try to buy training. So um, that's in a nutshell who we are. Um, there are a couple different ideas and things we want to get across in this workshop this morning. If anybody has any questions too, you're more than welcome to ask at any point here. We're always happy to take questions here throughout the webinar. But one of the overlying concepts that we want to get across to everybody is this: in 1889, there was the first Oklahoma land rush. If you've ever seen the movie Far and Away, I think that depicts that Oklahoma land rush. The land rush was a big deal for people. It was part of what drew people to come out to the United States. It was the idea of owning land, and uh, you know, at that time, 50,000 people lined up, and at noon, you know, they set off, and everybody took off to go and to grab their own claim because it was free land. Well, what people don't realize is that there are opportunities like this right now. You know, there is another land rush taking place right now, and we're in the midst of some huge changes with counties and county websites and their ability to sell things and how easy it is for us as investors to buy them. In other words, we're at a unique point in time where I think we have a better opportunity than maybe ever before. And we're at a point where maybe we have opportunities now that didn't exist just a few years ago. And so that's one of the points we want to get across. We want to show everybody exactly how that works and where you can find these types of opportunities. And we're going to get into those topics and a lot more in the training today. So we're going to talk about tax sales and how they operate. And we're also going to talk about, we're going to talk more about our perspective here on this and how you can get involved.
Yeah,
If you want, you can go ahead and you can talk about the property tax cycle and just reiterate anything you'd like with them.
yeah, not a problem. I mean, as far as how this tax sale system works, and really, just like Shade said, there, you know, we've been involved with this for quite a while, and I really think that there's a better opportunity now than there's been, at least since we got involved. I mean, um, back, you know, 15, 20 years ago, when you were looking at tax sale investing, you couldn't you had to go there in person, and actually doing property research was a matter of spending hours or days, or in some cases, depending on how much you had to invest, weeks at the county courthouse, essentially going through and trying to research these records. And so what's kind of changed between now and you know, I guess back then and now is really the ability to do this all online. And how this tax sale system works is essentially the property owners pay the county government for property taxes. Everyone has property taxes. That's how county governments run. Governments run off different types of taxes. The federal government runs off of, income tax and different taxes, and the state government runs off different state taxes, and the county government essentially runs off property taxes. And so what happens is the property tax is paid to the county government, which essentially pays for the local services, things like fire, schools. That's one thing we may not realize is the county pays for many of the services that are used throughout that county. So the roads, the schools, the fire department, the police department, all of that's going to be paid through county records.
Yeah. In fact, regardless of where you live, your local government is going to be the one that provides a lot of the basics, things that you see around you. And what we're really talking about whenever we talk about tax sales is we're talking about property tax enforcement methods. We're talking about ways that county governments are able to enforce their property taxes. And so the question really that comes up here is what happens if property owners don't pay their taxes on time? The county's planning on that money. They need that money for a lot of things they have, ongoing funding needs. And so the county has to have these enforcement systems in place, and what they turn to are their state laws to determine how that will happen. And that's why you can have different counties in different states that will handle property tax enforcement differently. But either way, there has to be some kind of a system in place or people wouldn't pay their property taxes. If there wasn't the threat of losing your property somehow, because you didn't pay your property taxes, nobody would pay them. And so that's really where these systems come into play. They have to have something there. And so it's these state laws. Steve mentioned that the federal government has laws, state governments have laws, and many of the laws that we read about are laws that dictate how the government can collect money for taxes. Collecting taxes is a big deal for governments, and so when they do so, they have to do that with powers that are given to them through those state laws. And so the state laws are very specific. Federal laws are very specific about how the government entities can collect property taxes. And even our county governments do the same thing, but they rely on the state laws in order to do what they do. So that's also, like we said, what led to a lot of the confusion around this is because you could have, if you're dealing with counties just within the same state, you can have quite a bit of variation between how different counties operate. If you go outside of that state, the systems can be completely different, and it's an easy thing to get confused by. In the beginning, there was nobody that was really able to explain to us exactly how things worked. Here are tax liens. In the beginning, I remember thinking, okay, we have tax liens, but I didn't understand tax deeds. I didn't understand why sometimes people would talk about tax liens about like they were earning interest rate returns, and other times they would talk about it like it was all about property acquisition. And so originally when we tried to figure this all out, what we realized, and we realized this through reading state laws, was that there were just a handful of systems that were used basically throughout the entire United States. And that those systems could basically depend on what state laws said. And we actually narrowed it down to 3 systems total that we'll talk about here in just a second.
That's a kind of a good point, Shade. And as far as the programs when we first got started, that's kind of how we had to learn is when we try to read a book or something back, 20 years ago, the book would be from somebody who understood their state. So it would be kind of based on a guy from Arizona who lived in Arizona, kind of understood tax liens, and then would kind of take his understanding of Arizona and put that state as a broad knowledge of how every state works. And so you'd read that book and then you'd think, well, that's not how Utah works, where we're located. They do a tax foreclosure. So and then or maybe it was a person out of New Jersey or Florida. And so essentially when we eventually created our program, what we did is we figured out how every state works, just like Shade mentioned, by going through the state laws and breaking it down, and then was able to put together these, the three different systems based off of the different types of tax sales that we noticed. What's similar about these tax sales, what makes them the same, and essentially broke these down. And this is really kind of the systems that are used generally through all tax sale training. Most companies are going to break it down into these three different systems today.
Yeah, and the way we figured this out was by reading state laws. For each state, you can find the laws regarding property tax enforcement, and you have to read through those to get an idea of exactly what this state means and how it operates. And what we determined after reading enough state laws was that there were three systems that were used throughout the entire United States, and that most states will use one of these systems. There are a few states that actually use two of them, but that all property tax enforcement would fall in these three systems: a tax lien system, a tax deed system, and a redemption deed system. And that really covers everything. So if you can learn just how these three systems alone work, then you'll pretty well understand property tax enforcement wherever you're looking at it in the United States. I think this was also one of those real aha moments for me when we really kind of figured out this premise of it, that there were these three systems and that this is how it worked. It made everything else make sense. It was difficult to correlate between different states and counties at that point. But when we figured this part out, we could at least divide the country up into states that used tax lien systems, states that used a tax deed system, and states that used a redemption deed system. So that went a long way towards helping us understand how exactly it worked. Now, we want to make sure everybody here understands some of the basic concepts here related to tax liens, tax deeds, and redemption deeds. And we think it's important you understand how each one of these work, regardless of which one you're mostly interested in investing with. So there are a couple things that we can talk about here regarding tax liens. And again, this is kind of an abbreviated version here of it. But if we were to talk about exactly what a lien is, a lien is a legal claim that can be placed against property that basically prevents the property from being sold or transferred. Maybe you've heard of things like mechanics liens before. Mechanics lien is what would happen if oftentimes if people have work done on a home that they're building. Let's say you have the electrician come and do work, and then the electrician doesn't get paid. They can place a lien against the property. And what would happen is when you went to foreclose on the property, not foreclose, when you went to close on the property after the house is finished, you wouldn't be able to actually complete that process. You wouldn't be able to transfer ownership because of that mechanics lien that was against the property. The way to get that removed would be to pay off that lien. Well, a tax lien is like that, only with far more power. And that's because, again, this has to be the enforcement model for property taxes. So in tax lien states, what happens when a person's late with their property taxes is the county will place a tax lien against the property for the amount that's owed in delinquent taxes. Now, that lien has tremendous power. It's what we call a first position lien. It means it takes priority or precedence over any other liens or claims, even a mortgage, okay? And that lien prevents the transfer of ownership with the property. So the owner can't sell it as long as that lien is against the property, and it can eventually lead to the loss of the property if it's not paid within the redemption period, which every tax lien has a redemption period that's associated with it. And that's like the time period before the tax lien can actually be used to foreclose on the property. Now, the purpose in creating a lien is to collect the money that's owed now. In fact, you'll find that over and over again with counties, is that their only objective is to collect the money that's owed to them. And creating a lien is simply the easiest way for many counties to do that. And that's because when they create the lien, it gives them something that they can sell. It gives them something that they can sell to collect that money immediately, and it creates an investment opportunity for the investors, which is kind of interesting. You don't hear about it very often, but every state has an investment system built into it when it comes to property tax enforcement. And they rely on local property investors to make that whole system work. So their purpose in creating this lien is so that they can sell these liens at a tax sale, meaning that they want to invite the public investors to come out and to buy these liens. And for investors that buy the liens, they're guaranteed a high interest rate return, and their investment is secured by property, which makes it a very safe investment compared to anything else that you'll find. So investors might buy these liens because they can earn an annual interest rate return like 18%, which is not an easy amount to earn anywhere else. And so I guess, for this example, we can say this is like Florida. Florida has a 2-year redemption period and a maximum interest rate return of 18%, which is how they draw investors to come out to the tax sales and to buy up these liens. So for the county, it works great. They collect the money they need right away. For investors, they're able to buy these investments. You can buy a $1,000 tax lien that's going to pay a high interest rate return and is secured by property. And for the property owner that's late with their property taxes, it is a grace period. They don't have to worry about losing their property to foreclosure for a pretty long period of time. So it works out well for them. It's a grace period while they come up with the money they need to pay. If you want, Steve, you can kind of cover what happens here on this slide. I know I've got the slide a little bit messed up here. So from the day of the sale here.
Yeah, not a problem. I mean, as far as when that tax lien is issued, let me kind of go back one step. Let's say that we live in Florida, I have a home, and I was delinquent on my property taxes for 2016. Well, in 2017 and during the month of May, around June, the county is going to go ahead and place a lien against my property for that 2016 or 2017 property taxes, 2016 property taxes, and they'll go ahead and sell it in 2017. Now, once that tax lien is issued, or essentially on the day of the sale, that tax lien is going to start earning an interest rate. It's going to be offered for sale, and investors are going to buy that lien, they're going to buy that debt, and they're going to start earning an interest rate. So essentially, two things are going to happen. First, they're going to start earning that interest rate. That's when the tax lien essentially starts. And once it starts, from there, there's going to be a redemption period. And in Florida, it's 2 years. So from 2 years from the date of the sale in June, let's say June 1st of this year, then 2 years from that date, that tax lien holder, whoever bought my debt on that property, will be able to foreclose on that property and essentially either become the property owner, or they're going to make back their money with the interest rate return. And that's generally what's going to happen. 95% of the time, the property owner is going to go ahead and pay back the delinquent taxes. So it's really a win. It's really a win-win win situation, because the property owner is able to get their debt paid for. They're able to not have to lose their property, and they get a year or two. They get 3 years from when they were originally delinquent to be able to get that all taken care of. The investor is going to make a good interest rate on their money, and an county needs that money. I mean, that's one thing. If you've noticed, or most people probably don't pay attention to county governments like me and Shade do, but many of these county governments are hurting for money. And so essentially they need to get all the money they can. And so it's a win-win situation for all investors and for really everyone involved.
In fact, we're really kind of a unique time point right now because, like Steve said, counties need the money. Counties need the money worse now than they ever have. And many counties are starting to figure out the fact that they have this mechanism to make money. They've got these tax sales, and that most of the counties out there have not been running their tax sales very efficiently. They do things in kind of a county government kind of way. They post an ad in a newspaper for a tax sale, and they kind of wait for local investors to show up. And year after year of doing this, it just hasn't really been that successful. Now they have the ability to reach out to so many more people through the internet. And that's part of what's changing. We're starting to see counties that are treating their tax sales like a business. And that means that they're being efficient with it. And it means that they're making common sense decisions and doing things that will help them make more money, which is good for us as investors because it means that they're simplifying the process for us. So when you buy a tax lien, what's really important to remember is that there are really only two possible outcomes or scenarios here for the lien. Okay, and they both depend on the property owner and whether or not they pay off their delinquent taxes. Like Steve mentioned before, the vast majority of these redeem. In fact, that's how tax liens are designed. They're designed to redeem, and that's what happens in 95 plus percent of the time is that they redeem because nobody wants to lose the property to foreclosure. Just because you're late with property taxes doesn't mean that you're never going to pay it. And so if the property owner pays off their taxes at some point, what happens with the county is once they receive the money from the delinquent property owner, they'll remove the lien from the property and they'll cut a check to the investor for their initial investment plus the interest rate they've earned up to that point. So if it was 18 months long, the investment, and you were earning that 18% return, that is accruing every month at a rate of about 1.5%. So if it was $1,000 investment and you had it for 18 months before it redeemed, then it would pay out, let's see here, 27%, roughly it, which would be 18% plus 6 months worth. So yeah, 9 plus the 18, we're looking at 27% is what you would get. So you get $270 back. You'd get a check in the mail for $1,270. Now, yeah, like we said, this is what happens the vast majority of the time, but we also mentioned that tax liens are a very powerful lien, a first position lien, and they have to be that way in order for them to work, meaning that they have to take priority over things like a mortgage. Otherwise, property taxes wouldn't get paid, and the county government wouldn't have any way of trying to pursue that or fix the situation. So if the property owner doesn't pay what they owe within that redemption period, which like we said in Florida is 2 years, then that lien suddenly changes from just being a lien against the property to being something you can actively use to foreclose on the property. And as you go through the foreclosure process, really what that's about is giving the property owners or anybody with the financial interest in the property the chance to pay off the debt before they lose the property to foreclosure. And it's the same in this situation. And the owners are given the opportunity to pay it off. In fact, most of the laws are written to protect the property owner so that they don't just lose their property, that they'll have chances to get it back. But ultimately, if the amount isn't paid, then the lien is used to foreclose on the property, and the lien holder becomes the new property owner. Which that's what we mean when we say that it's secured by your amount. The lien that you buy, the amount that you spend is secured by real property, which is part of what gives these liens so much security. You're either going to get a check in the mail with a high interest rate return, or you're going to acquire the property. But it's really that simple. It's one or the other. Now we have. Okay, we're talking about the tax lien system here. Let me just quickly cover what tax deeds are here before we talk about the buying methods, because we don't want to dive too deep into each one of these systems. The tax deed system is very simple. We see it used in about a third of the states that are out there. And essentially what happens is the county just begins a redemption period. And that redemption period is set by state law. So maybe the state law gives property owners 2 years or 3 years, whatever that time period is, before they can lose the property to foreclosure. When that time period passes, one of the differences with these counties is that counties in tax deed states have the power to foreclose on property. So they'll basically start the foreclosure process, and if nobody pays off the amount that's owed, then they will foreclose on the property and offer it at a tax sale. So if you're looking at a tax deed sale, you are looking at property that's being auctioned off to the highest bidder. and the opening bid amount for it will be what was owed in delinquent taxes and fees. So uh, if you're into property acquisition, then tax deeds are the easiest way to go out and to buy property. They're also the cheapest way to buy property, which we'll be able to talk about a little bit further on here in the webinar. But between tax liens and tax deeds, you basically have investments that cover a pretty broad range of objectives here for people. There are some that are looking for a way to earn a high interest rate return safely. Okay, so things like retirement funds, maybe they're looking for a safer way to invest large amounts of money to earn, let's say, a 10 or a 15% return on their money, which is pretty hard to do with any other investment, especially safely. Or for others, if they're looking for property, you can actually buy these properties right as they've been foreclosed on by the county as tax deeds. And so you have these opportunities to either acquire property or just earn a high interest rate return very safely. And so, yeah, let's talk about the buying methods. If you want, Steve, you can kind of talk about some of these buying methods here for a minute and how you can go about buying them, and then we're going to talk about. We'll kind of dive into that. You still there, Steve? If your mute button is still on here. I don't know. Maybe
It's
we
not.
dropped.
Can you hear me?
Yeah, now we can hear you. Yeah, you there, Steve? Well, that's okay. It sounds like he cut off here for a minute. So when it comes to buying methods, how you can go about buying tax liens and tax deeds, there are a couple of different ways that you can do this. Live auctions are the standard system that's in place, and this is still the most popular, still the one you're going to find most commonly are live in-person auctions. And this is the way counties have been holding their sales for many, many decades, and there's most likely a sale that takes place, near you at least once a year, and maybe more often than that. Tax liens are generally offered once a year from counties, whereas tax deeds are offered as often as necessary. Okay, so live auctions have some advantages. They're a great way to buy, and we recommend anybody that's never been to a live auction before to attend one. When Steve and I started, it was doing things like attending the live auctions that really taught us most everything we learned about tax sales. It was just by doing some of these things. By attending live sales, you really learn a lot about how it works, and also in buying things, maybe the first liens that we bought were really cheap. It was like $67 was my first lien, and it was a valuable experience just by itself, just by going through the process and seeing how it all worked, which is something else we'd recommend. The online auctions are a new phenomenon. That's something that was really the very first online auctions that we saw were right around the time that we got started. Florida had some of the first online auctions that we saw. Florida and Arizona were kind of ahead of the curve when it came to how they conducted their sales. And they began offering these online auctions. And I want you to think about this. Up before this point, we were limited in a number of ways when it came to tax sales. In fact, the reality of it is when we first started, I don't think that tax sales were something that you could really pursue aggressively as an investor, at least not for most people. And that was because you were limited by travel. You were limited by those constraints. If you wanted to do research on a property, you had to go down to a property records building to locate records about the property so that you could just perform the due diligence. If you wanted to participate in a sale, you probably had to be there in person in order to participate, and that's a difficult thing to do if you're looking at investing in a lot of different counties. So what online auctions did it, and that they're also coupled with another thing, which are online property records and record search tools that you'll find on these county websites. Over the last 20 years, we've seen many, a lot of counties that didn't have websites have built websites now, and in addition to just having the websites, they also have online record search capabilities, and that was a total game changer. That made everything about the investment far easier. what used to require days and even travel, we could now do within a matter of minutes online. And that was where we knew that the investment was taking a dramatic turn. Um, the online auction side of it meant that the county could reach so many more people than they were able to before. Whereas before they were limited by the number of people they could fit into the room or that they could draw out to their sale. Now, with online auctions, they're able to reach a national audience, even an international audience, really. So online auctions were pretty big game changer, and I think that we're still seeing that. It's still in the process of changing now. We're seeing more and more counties switch over to systems like this, and I think that eventually we'll see all counties move over to various online systems because they're so much easier to deal with. Um, can you hear us now okay, Steve?
Yeah, I came back in. Can you hear me all right?
Yeah, we can hear you okay now.
Yeah, for some
Yeah,
reason I'm
yeah,
having
yeah. Oh, no big deal. You can go ahead and talk about over the counter and bank owned if you want.
Yeah, definitely. I mean, as far as over the counter is the leftovers. Now, what's nice about these leftovers is essentially the tax liens and deeds that didn't get sold at the auction. So like Shade talked about live auctions, online auctions, there's lots of different reasons why a tax lien and deed may not sell at the auction. And usually it's just going to be a matter of investment. So, there wasn't enough investors that had interest in that auction, and there was too many properties available. And so many times there's all of these different properties that don't get sold at the sale. Now these are tax lien properties, tax deed properties, and there's even struck off deeds in Texas in redemption deeds as well that you can go through and you can pick these properties up, these liens, deeds, after the auction. So that's essentially what over the counter is. Now there's properties available all throughout the country. In fact, me and Shade have been spending the last 2 weeks essentially going through over the counters and purchasing properties ourselves. In fact, yesterday we probably found about $50,000 or $60,000 worth of over-the-counter tax liens in Florida that we'll be purchasing with one of the investors we're working with. And so essentially, these are tax liens and deeds that are available directly from the county. Now, what makes it nice is that when you purchase one of these over-the-counter tax liens, you're not going to be bidding down the interest rate. When you purchase one of these over-the-counter tax deeds, you're not going to be bidding up the price like you would in an auction. So let's say you have a $100,000 home, it has a $10,000 opening bid at the auction, maybe it sells for 20, maybe it sells for 25, depending on the quality or whatever. With these over-the-counter properties or over-the-counter tax liens and deeds, you're going to get them at the lowest possible price. So if the opening bid is 10,000, then you'll get it for 10,000 or 5,000 or 1,000 or 500 or whatever. Same thing with tax and certificates. You're going to get that higher interest rate return. So essentially, that's what over-the-counters tax liens and deeds are. Now, with bank-owned, essentially what these are tax liens and deeds that were purchased on the secondary market. So with bank-owned certificates, those could be tax liens that essentially these large banks go out and they buy huge bulks of tax and certificates. Or a big investor buys tax and certificates, and essentially they want to get out of those tax liens. Essentially that's kind of what those secondary market is purchasing tax liens after they were initially already purchased. So you're not going to be buying them from the county. Essentially, you're buying them on the secondary market. And that you can purchase both tax liens and now we're getting tax deeds as well on the secondary market. So, recently we had just tax liens available. We're also including tax deeds as well that we're going out and purchasing and finding and buying and making available. So that's kind of what the bank owned or the secondary market tax liens and deeds are these tax liens and deeds that are available directly from us or from a secondary market provider on the secondary market. Even if you were to purchase one from another tax sale investor, so let's say I bought a property, you were interested in it, and so I wholesaled it to you, essentially that would be a secondary market transaction. So it means that you're not buying it from the county, you're buying it from somebody who originally bought it from the county.
The secondary market is also a really exciting concept that hasn't been around very long. It didn't really exist just a few years back. And it is a way for investors to get all of the benefits of tax liens without all of the time that you normally require in order to buy them. It is sort of an investment strategy for those people that have more available capital than they have time to be able to just to do it on their own. And the way that it works is interesting. Big banks and financial institutions have been buying up liens for a long time. I mean, they've known what a good investment tax liens are for many, many decades, and they've invested much of their liquid cash into tax liens. But they are inherently lazy with it, and they want the easy money. So what that really means is that they're sitting back waiting for the checks to come in the mail. They're waiting for their liens to redeem, which we already know that 95% of those are going to redeem, so it works out just great for the county, or for the big banks that buy these. But there are some properties that you need to pursue foreclosure on in order to get them to redeem, or maybe they're not going to redeem at all, and they just need to be foreclosed on in order to execute the whole process. With bank-owned properties, the banks are lazy about doing that. It can be a very simple process, but they don't generally pursue that. They just kind of sit on it and wait. And so there are opportunities where you can invest using bank-owned liens into liens that you can begin the foreclosure process on immediately, which increases your chances of getting the property. It also reduces the overall duration of the investment, and it's something you can do without spending a lot of time. We do this all through our portfolio manager. And our portfolio manager, basically what our portfolio manager, Mark, does is he finds out what exactly we're looking for, how much we want to invest, and then he goes through the portfolio of bank-owned liens to find those that would best fit what our objectives are. And he basically purchases those for us. Okay, now we've got a question here. One of the questions we have here is how much are you marking up the lien or deed percentage-wise? And if it's in regards to the secondary market, which I'm not sure if that's what they're asking here is on the secondary market, or you mean when we just sell these in general. If we're talking about the secondary market, that's actually part of what is appealing about the secondary market, in that banks can sell these liens. They can also offer discounts on it. Okay, so they can offer a discount to the investor, which is great. It means that that you can walk into the investment with equity already. You can already have money that you're making on it. In terms of what we charge, we pretty well, I don't know if we really charge anything on top of it. We don't really have any add-on cost that we add on to it. We basically have relationships established that enable us to buy some of these liens at a discounted rate. And the ones that aren't discounted, we don't really add anything on top of, just because, again, the investment here is I guess it would mess up the investment. There are some investments out there that I think are offered to people that are essentially toxic, and that's the exact thing we've wanted to avoid. We want to do the opposite of that. We've seen companies offering people property that has a lot of problems. In other words, offering secondary liens that have huge problems, that are basically toxic liens, and that was our original reason for wanting to be able to offer it ourselves.
Yeah, I mean, when it comes to bank-owned certificates, essentially, the the type of certificates that we're able to make offers on and the amount of the certificates will dictate whatever the discount will be. And so if we're, the bigger discount that we get, essentially we split that with the investor, depending on what's available and depending on how much they're looking to invest. And so in addition with that, we've also started picking up over-the-counter tax deeds, because we have a lot of investors who want to purchase some tax liens, but maybe they also want to have some tax deeds in their self-directed account as well, that they can sell or finance or rent out or whatever. So that's something we're doing as well, because of the request from all of the investors we've had. We're starting to get over-the-counter tax deeds as well. Not over-the-counter, but secondary tax deeds.
One of the other questions here is, are you selling access to information about the over-the-counter properties? I think if I understand the question correctly, I think it's referring to some of the personal work that we're doing with the over-the-counter investments that we're looking at, and the answer is no. We're not really selling any specific access. You mean like if we find deals, if we find good over-the-counter tax liens, are we selling that information? And the answer to that would be no. We basically are going through those types of lists and finding those properties for some of the investors we're working with. We do provide all of the lists, so we basically you can download all the lists here to do the same thing. I guess what we essentially don't sell is just the specific liens, telling people which ones to buy. At least not when we're working with them, not on just the monthly membership level. I think if that's what the question is. Okay, so we've discussed some of the basics here of tax sales, kind of how they work. We've talked about our viewpoint on it, why we think it's a good period of time to be involved, and what we think some of the differences are. But we started this off talking about this great land giveaway and how we think that we're at a unique point in time right now. What this is really about is county-held property and the way that counties are changing in general. You know, like we said, counties seem to be evolving, and they understand better that they have this opportunity. They have this business model with their tax sales that if they can get it to work properly, can make them a lot of money and can help the county out in many ways. In addition to that, for many decades, many counties have been trying to sell they've been conducting their tax sales the exact same way. And some counties struggle more than others when it comes to trying to draw out investors. In fact, there are lots of counties that have 10 times as much property available as they ever have investors that show up at their sale. So a lot of these counties end up with a lot of properties on their books. In fact, every county has a certain percentage of properties that never seem to get the property taxes paid. And what happens with these properties over time is that the taxes owed on the property just continue to go up, and they continue to go up, and it gets to the point where obviously it's not an attractive investment because the opening bid amount is so high. The county doesn't look at that always and say, oh, well, you know, we need to change that. The county just kind of keeps adding the property taxes to it every year, and so you have these properties that don't sell year after year after year that the county never collects property taxes on. Well, what we're seeing is more and more counties understanding the fact that these properties are never going to sell because they're overpriced, and the counties are basically forgiving some of the debt on these properties. You know, once they realize this property is never going to sell for this amount, then they will forget about all the taxes that are owed, and they'll set up or sell the property for a set price just so they can get a new owner in it that will begin paying property taxes regularly. The counties need investors to buy up these properties and to get them on the market, and that's because the county's not good at doing this themselves. You know, if when we first started, I always had this feeling like somehow as the investor, the county kind of looked at the investors like they were these scavengers or something. But the reality of it is they absolutely need the investors because the county doesn't know how to sell. The county's never been good at that. They just follow what's on state laws. They have no idea how to market properties across the nation. And most of them don't really have the desire to learn. It falls outside of what they're interested in doing. But what they can do is they can try to attract investors to buy up these properties and who can then market them themselves. And that's really what the counties need, is the counties need investors. They need tax sale investors to buy up these types of properties and then to get them marketed so that they can find new buyers for these properties. Go ahead.
Yeah, well, one thing about these counties is maybe some of the bigger counties out there, they may have somebody who's really kind of dedicated to the tax sales, but a lot of these counties, in a majority of them, it's going to be one of their additional duties. So you're the tax collector. It's just one of the many things that you're doing. So Shay talked about how they're not very good at selling or marketing these properties. A lot of times it's just kind of one of the 50 other things that they're doing. So it's important, but it's not as it's essentially they need that to essentially make back their money, but it's one of many other things that they're doing. So you know, as we're working with these county officials, a lot of times you'll have to talk to a couple, and you're going to be able to find the right people to work with that could essentially give you the information you need. I mean, that's what the counties are there to provide. The property assessor is there to assess the property. The tax collector, essentially becoming a tax sale investor is working with county officials, working with government officials. That's going to be a skill that you're going to need to acquire essentially if you want to be a tax sale investor. I mean, you can purchase like tax liens online. Essentially, you can do that all online. But for most tax sale investing, or a good portion of it, you're going to have to do some type of communication with these county officials, and so that's additional skill that you'll learn as a tax sale investor, as essentially working with these county governments, learning how to navigate county websites. I mean, that's going through property records. Working with the county and working with these county websites is really going to be one of the biggest skills that you're going to need or that you're going to learn as a tax sale investor. That's where we get the property information. That's where we get all the information that we're going to need to essentially make a good informed decision on a tax sale property.
Yeah, when counties are prepared to sell these properties, especially when counties forgive the debt that's owed on these properties, or even in cases where the county doesn't, there's just not a whole lot owed in taxes. We're talking about real estate. We're talking about properties that you can pick up for as little as $25, $50, $100. Um, for less than $500, I think you would be shocked at the number of properties out there, that are available to you. One of the questions we have is, are these county-held properties typically in poverty areas? Well, one of the I think probably what we spend more time doing than almost anything when we're teaching members is trying to get members to change the way that they look at real estate. And to elaborate, what we mean here is even for real estate investors, but for the average person, the majority of the experience they have in real estate is as a consumer. Okay, so if you've bought your own home, if you've which is what the limit of most people's experience with real estate really is, just kind of buying their own homes. And when you are a consumer of real estate, the questions that you would ask and what's important on properties is quite a bit different from when you are a wholesale investor. Okay, there aren't that many people that understand and know how to find these tax sale properties. It's just a reality. It's just a fact that there just aren't that many that really understand it and that are out there buying these things. And so there are a lot of opportunities that are out there, and this is a skill that you're acquiring. And we're talking about buying properties for $25, $50, $100, $500. To me, any property you pick up like that that's less than $500, it's essentially like it's being given away. And really it is like it's being given away for that kind of a price. There just isn't real estate that you can buy that's that cheap anywhere. I mean, people spend that kind of money on ridiculous things. Like the idea that you can get real estate instead is pretty remarkable. But in the answer to that question, are these county-held properties typically in poverty areas? You can have a wide range of property types in all different areas, but I think more importantly, it's about changing kind of the mindset that the investor has, because what is a poverty area if you think about it, if you're paying next to nothing for the property?
Yeah, I mean, I really think what Shade's saying is that we're not so worried about location. We're usually most worried about price. Because, even if we pick up a property, and you can find, just like Shade said, you can find, in fact, this week we found a building lot on a nice sandy island. where you have a building lot on this island. We found building lots on golf courses. We found commercial property, single-family homes. There's all kinds of different properties out there in all kinds of different locations. And a lot of places are going to have tax sales. So there's a good chance that they may have over-the-counters available in many different areas across the country. But really what we're looking for, what's most important for us is price. So even if it's maybe in a bad area of town, but we're able to acquire this, home for $1,000, but it's worth $70,000, then it really doesn't matter in the location because we're just going to be wholesaling this to somebody that will do the additional work. So we're essentially picking this up because of price, because we know that we can turn around and sell it and make 20 grand and quickly and have somebody else do it. So it doesn't matter to us. We're looking at it more of an investment standpoint when we're looking at these different deals.
Yeah, in fact, um, you know, these are some images here of different over-the-counter properties that were purchased. Um, you know, I guess the type of area that it's in doesn't really matter to us very much because ultimately price is what dictates everything when it comes to real estate. And so if you're only looking at this, from the numbers perspective, there are a couple of facts. There's a limited amount of real estate, and so there's only so much real estate out there, and they're not making any more of it. So anytime you can buy real estate, I think it's going to be a good investment. Historically, it's been the best investment. But if you're paying almost nothing for properties, then you'd be amazed at how valuable and how you can make money on so many different things. If you pay $100 for a property, you've got a million different ways that you can make money on it. And so the traditional questions that you would have about the real estate, what is the condition like? Those things aren't really important because, again, you have so much room to sell. I mean, if you pay $100 for a property, you can sell it for any amount you want. You can offer owner financing on it. You can offer and do things that people can't normally do, and it's easier to sell it now than it's ever been before.
Yeah, it's really just a matter of researching. I mean, I don't know how many thousands of properties that we've gone through and looked at different properties. And so it's really just a matter of going out there and finding these properties. It takes some work. You're going to have to go out there and research list and go through list and learn how to do it. But as you get better and better at it, you're going to find these type of properties out there that you can purchase for 1, 2, 3%, 5% of their value, and be able to turn around and sell and make a great profit, or even seller finance. When you're buying property for less than 5 cents on the dollar, 10 cents on the dollar, it gives you so much flexibility. Even at online auctions and things like that, you can acquire some of these properties for that type of a price point or that type of a range. And so when you're able to acquire properties for just a little bit of their value, then it gives you a lot of flexibility in how you offer and sell these properties.
Yeah, in fact, the examples we have here, I mean, the example on the top right we have here is one that, for all intents and purposes, would probably seem like worthless property to a lot of people. The member that we have bought it for $39, and what you can see is it is the strip of land you see there is going out to a main road, and then you see it's a residential lot that had a actually, I don't know if I don't think there was a home on that lot or not. I think it was just the lot itself and and then kind of the driveway area.
Yeah,
But
it's just about a half acre, a little over half acre lot with the driveway going into it. So essentially just a building lot that wasn't landlocked because it had the driveway. So essentially picked it up for $36 and then was able to turn around and sell it to the neighbor for $1,500. So essentially all he had to do was buy that, send out a letter to the surrounding neighbors, and was able to sell it to one of the neighbors.
yeah, which is part of what we teach and part of what we show people how to do is how to do simple things like that. If you look at like the building lot on the left, here we're talking about a property here, $691, and it's a building lot. Okay, you can see it's next to another home there. Properties like that are my favorite, because They obviously have value, and you can pick them up for such a low price, and they're easy to sell. I mean, you pay $691 for that piece of property. Think about all the different ways you could sell that. And how easy it will be to make money on this. In addition to that, you can offer owner financing on some of these types of properties, where let's say you get $1,000 down, and then they pay $100 a month for 2 or 3 years in order to reach the selling price on the property. You've just taken a $691 investment, and you've collected $1,000 down, and now you're getting $100 a month for the next 3 years, on the property. You have so many options. Price dictates everything when it comes to real estate, and if you can pick up property for next to nothing, you can make a lot of money with it. Now, just kind of moving on from here, when we talk about the new foreclosure opportunity, what exactly are we talking about? Well, when we even bring up the word foreclosure, what is it that comes to mind, and what do you picture? Because I think for most people, what they think of, or what most people equate with foreclosure, is this, like mortgage foreclosures or bank foreclosures. That's probably what comes to mind. But the reality of it is there is more than one type of foreclosure. And there's one that has a tremendous amount of power and one that doesn't really. And so we want to see if we can help you understand just how powerful these foreclosures are, and what exactly we're talking about. Foreclosure is essentially the legal act of removing a property owner's rights, the ownership rights, because of some kind of an unpaid debt. But there are two different types of foreclosure. We have a judicial foreclosure and a non-judicial foreclosure. Judicial, obviously, through the courts. Non-judicial is not through the courts. You could also say that judicial foreclosure follows state laws. Non-judicial foreclosure doesn't. Okay, and there's a reason why this is so important to understand. A foreclosure that's done through the courts, a judicial foreclosure, is what we refer to as a true foreclosure. And that's because this is done through the courts. It is a longer process. It takes some time. But essentially what happens when a judicial foreclosure is executed is it extinguishes any encumbrances or liens or anything that's attached to the property. Okay, so when a judicial foreclosure is actually executed and that property is foreclosed on, you can rest assured that there is nothing attached to that property anymore, because anything that was attached to the property was wiped off when the property was foreclosed on. Okay, now when we're talking about bank foreclosures, really what we're talking about there is a breach between the lender and the borrower in their contract. And when you get a mortgage from a company, part of what you do is you sign away your rights to a judicial foreclosure. You sign away your rights to that in a part of the sales contract called the power of sale stipulation. And what it does is it gives the mortgage company the right to foreclose, take the property away from you in a short period of time, and resell it. So let's say that a person doesn't pay their mortgage, and within a few months the mortgage company comes in and they foreclose on the property. What they're really doing is they're just kicking the property owner out, but has the ownership really changed at all? No. The mortgage company owned the property before, and they still own the property now. And are the liens or encumbrances attached to the property, are they still there? Yeah, absolutely. Nothing about the actual deed of the property has really changed. We're just talking about the mortgage company trying to kick out that property owner so that they can resell this property to the next property owner and try to do the whole thing over again. They want to do this non-judicial foreclosure because it's the cheapest way for them to do it. They don't want a long process here, so they can basically execute a non-judicial foreclosure very quickly. But there's a reason why, when we're looking at these two types when it comes to investing, why we don't really bother with non-judicial foreclosures anymore. And it's because you're going to have a limited amount of discount that you can get from the mortgage company versus what you can get through a tax sale. And
Yeah,
the reason for that, oh, go ahead.
I was just saying, even in addition to the discount, you're also, with a mortgage foreclosure, you're also just essentially buying the bank's debt or whoever's doing the foreclosing on the property. So usually that could be usually going to be done by a mortgage company. Sometimes it could maybe done by like an association if the property's in some type of association, but usually done through the mortgage. And they're essentially foreclosing on their debt, their claim on the property. So any other types of, if there's a second mortgage, if there's judgments, if there's anything like that, that could still stick to the property depending on the type of auction there, depending on the state. With the judicial foreclosure, essentially, like Shade said, all of those mortgages, second mortgages, judgments are essentially going to be wiped out. The only thing that would ever remain would be some type of other governmental lien, and most of the time that's going to be pretty rare in most cases. And so, essentially, it's going to eliminate any of those additional encumbrances. And in addition to that, the opening bid is only starting at just the back taxes.
Yeah, I mean, really, the real key uh, to these judicial foreclosures, why tax sales are such a good deal, is because it's the only form of real estate investing where the the owner of the property, essentially, that you're buying from has no personal interest in what the property sells for. Okay, meaning that when you buy a bank foreclosure, that bank may be willing to offer some kind of a discount. Maybe they'll offer you a 10% discount or something like that, if you can even get that much. But ultimately, they're not going to discount the property any more than that because it's money out of their pocket. So they're not going to do that. They're losing money. When you're dealing with with an actual judicial foreclosure, when you're dealing with a tax sale, a tax deed property, the county doesn't care what this property is worth, really. All they really care about is what's owed in delinquent taxes. So the opening bid amount is going to include everything that's owed on that property, and outside of that, they don't care what it sells for. So if that is 10% of what the property is estimated to be worth, they'll sell it for 10% of what it's estimated to be worth. They don't care, which is unique to tax sales. You don't really find this with any other form of investing where you have the owner of the property not caring what it sells for, which I think will give you more profitability. And it's also why it's the cheapest way you can buy real estate, period. There's no other way that you can buy real estate that's cheaper than you can through tax sales. And it's for that reason. As long as it collects the delinquent amount that's owed, they don't care what it sells for. One question we have is, are you finding larger parcels, 10 plus acres, through this process? We do sometimes. I mean, we're in the process of looking for those types of properties.
No, yeah, I mean, absolutely. Absolutely, you can find them both at the auction and over the counter. This week we've identified and we'll be purchasing properties of 34, 40 acres, 30 acres, 20 acres. It's just really a matter of research and finding those properties based on the location. So you're not going to find big parcels in every area. It's just really a matter on what's available within that county. But are they available? Definitely. There's definitely big properties out there that are available. And the one thing that's nice about the tax sale market is there's always going to be new inventory. There's always no inventory coming. So, that's something as well as we have investors that just really focus on one or two areas in, maybe they're interested in deeds, they'll only focus on one county in Florida, but they'll keep investing in that county month after month because they know they're going to have tax deed auctions coming up every single month. And so even if they don't have one that month, there's going to be new inventory next month, and new inventory the month after that, and the month after that, and every single year in every single state. So there's always going to be new inventory coming as well. So you can find all different types of properties, including large chunks of land.
Yeah, in fact, this is just another slide just discussing how judicial foreclosure ultimately works, and what makes it different from that bank foreclosure. When a judicial foreclosure is executed, basically what happens is the county does a title search on the property, which will tell them who everybody is that has a financial interest in the property. So they can get that information, and they will send out foreclosure notices to all of those interested parties. And that foreclosure notice is going to give them a time period that they have to pay it off, the amount that they have, and what the consequences are if they don't. So it's a very fair system. It's intended to give everybody the opportunity to pay it off, and you have a lot of liens too that will redeem at some point, or even properties, deeds, that will not end up going to foreclosure. If you look at tax sales, sometimes you'll have properties that are on the sale with the first time the list is offered, but aren't on the sale right before the auction takes place, and it's because you have lots of properties like this that redeem. Because people are able, let's say the notice goes out to the mortgage company. They may not know that there is a delinquent amount owed until they get that foreclosure notice, which in most cases a mortgage company would step in and pay that amount before they would risk losing losing the property to foreclosure. Because ultimately, if even if there's a mortgage company involved and these foreclosure notices go out and nobody pays the amount, the property will be foreclosed on, and even if it has that mortgage against the property, basically what will happen is the property will no longer be collateral for the debt. You still have the loan between the lender and the borrower, but they no longer have the property there, in between them. So, that has happened, but it doesn't normally happen because most of the time, the party that has interest in the property will step in and pay it off, to avoid having that happen. But essentially, these are all the reasons why we believe in tax sales, why we look at tax deed properties, but we don't have any interest in things like bank foreclosures, is because we've already found the cheapest way to buy property, and there is no cheaper way to buy property. I think the same is true when it comes to liens, that we've already found the easiest way to earn high interest rate returns. I mean, if you can find me another way to earn 18%, that's even half as easy as it is with tax liens, I'll be a believer. But after 20 years of this, we've not seen anything, that really even compares. I think if you're talking about high interest rates of return safely, tax liens are the easiest, safest way to do it, by a long shot.
Yeah, definitely. I mean, with both tax lien investing and tax deed investing, it really gives us the opportunity to invest in both worlds, or gives us a chance to earn really a double-digit return in many situations, or a higher interest rate return than you can get in almost any type of investment that's secured by real estate, that's backed by.
I think it's cutting out for some reason a little bit here. Yeah, hold on just a second here, Steve. It sounded like it was cutting off here
And that
for a
really
minute.
your investment is one.
You still there? Can you hear us okay, Steve?
Yeah, you can't hear me though. Go ahead.
Oh yeah, it just cut out there for just a minute, to where we couldn't hear you very well. Um, there are so many different places that we can go to look, and really, for everybody that's here, if you're looking for what we're selling, essentially, we really don't sell a whole lot here. We have our primary membership website, which is taxsalesupport.com. And on that site, we provide all the training materials that you need, and we provide you with tax sale lists on a regular basis. But we've actually kind of moved away from a lot of the training side of it, just because we're spending so much more time with the investment side of it than we are with the training side of it. But we still do offer, we still offer the best value when it comes to the training side of it, because we still do the weekly webinars. We still have all the training content. Plus, we have all of the lists and things you can get, and we offer that for a pretty low price. But we don't really do a lot in terms of high-end training or expensive training, just because we spend most of our time looking for property.
Yeah, I'm not quite sure if you can hear me or not.
Yeah, we can hear you fine.
Okay. Yeah, just I noticed that for some reason I'm having some problems today. But really, as far as what we offer, we really offer a membership program where you can attend webinars each week, and really a list program as well. So we'll send you guys out an email after the webinar with the special offer to our membership program, and what we have available. And really, it's just a matter of, we want to work with. We have lots of investors. We have a real good group of loyal members who essentially follow us, and we work with them as they go out and do deals. And so, a lot of these success stories that you've seen us put out recently, if you've checked any of our emails or some of the videos that we've put out recently, these are being done by investors that are working with us through our membership program.
Yeah, we really do have a pretty big group of people that have been following us for a long time. Um, oh, there's actually some other questions here that I want to make sure that we answer all of the questions here. Um, One of the questions here is, what determines a judicial or non-judicial foreclosure? That's a good question. Anytime a property is foreclosed on, it should be a judicial foreclosure unless there is that power of sale stipulation. So unless there is a mortgage, unless there's a mortgage that's involved, any foreclosure should be a judicial foreclosure. That's the right that every property owner has given by state law. So every state has laws that basically give you the right to a foreclosure through the courts, which is basically the only way that people should be able to lose property unless they sign away those rights with like a mortgage company, in which case it's just a different story. But that's what happens the majority of the time here.
Yeah, and you can look at tax sales as, essentially tax sales. Any type of tax sale is going to be a judicial foreclosure.
Yeah. Now, another question we have here is your service nationwide? The answer to that would be yes. I mean, in terms of, we offer lists for I think for nationwide, and we work with people around the country. Our focus with investing has been throughout the country, and so we tend to go where we find the best deals. And so, but yeah, if you're interested in investing in just about anywhere, I think we try to cover those areas. I don't think there's any part of the country here that we don't mess with or that we're not interested in. The site you see here, this is just tax sale support. This is our membership site that we have, and the list center here shows just how we have lists available. You can either look at them through the auction calendar. You can also look at our over-the-counter database or the online auctions, or even some of the overage lists that we have. Like for instance, our over-the-counter database is separated by tax liens, tax deeds, and redemption deeds. So if you're looking for over-the-counter tax liens, you could pull up specific lists here based on state. You can also go, if you want, directly to links to live auctions and things like that taking place. Yeah, like we said, I think compared to any other list service or anything like that, this is definitely the best value, because you're going to get the lists, plus you get all the training materials that we offer, including the home study course, which is the program that the seminar companies used to sell for several $1,000s. We just basically include it with every membership, so that you get that stuff as well. So there's a ton of content you can download in terms of training materials, and then also the regular training we do on like the weekly webinars and all of the past webinars and trainings that we've done. And so let's see here.
Yeah, really the home study program is essentially going to be the first thing that we recommend all of our members do. And the reason is because it's going to really take you through, give you the knowledge that you need, but then it's going to break down the investor profile system. And what the investor profile system is 8 different profile types depending on what type of investor you are. And so it allows investors to go through and kind of determine, okay, what are the different profile types and what investor profile type am I? And that helps you narrow down the list. And so, the biggest problem that we had when we first started with teaching students, even way before we had our program, when we were just doing coaching, was essentially helping them decide what type of investment system works best for them. And so by picking a profile, that's going to narrow down the list to maybe 10 different states. And then from there, you can read our state guides. We've essentially broken down how each state works. And then from there, it helps you narrow down to pick a specific state. So what we're trying to do is take investors in through the home study program as they read that. And it's going to help them to figure out how it works all across the board, and then helps them hone down to exactly the type of investment they want, and then from there, this specific state that they want to get started with.
Yeah. One of the questions we have here is how much is the monthly membership? And for everybody that's here on the call, we're going to send you out an email so that you can sign up for $29.95 a month. The price on the site right now shows $39.95 a month, but Steve and I over the last few weeks have been talking, and we're changing that. So we're going to send out everybody that's attending this event a link to be able to sign up for a cheaper price, so that well, just I think as a way of saying thank you. And also to give you a chance to sign up here at a discounted rate from what you see there on the site. But yeah, if you've been looking at different tax sale training, you probably know there's a lot of stuff out there. Here's what we would suggest. You don't need to spend a lot of money when it comes to this training, and in fact, we would tell you not to. Don't spend a lot of money with this training. You know, there are so many packages out there where they're trying to sell people into $5 or $10 or $15 or $50,000 worth of training. And the reality of it is, you don't need it. That everything that you need to do, you can learn for quite a bit less than that. I mean, ultimately, what we see for most people that spend a lot on their training is they just end up wasting a lot of money, or they end up going into debt for their actual training rather than being able to make money with this. We wouldn't recommend people doing any of that. If you're looking for an easier way to invest into liens and deeds, then buy secondary, and we can help you do that. So that you can invest and get the benefits of tax liens without having all of the time and work required in order to do it. If you do have more time and you want to look into it, then there's nothing there that there's nothing that should cost you that kind of money, which is a big part of our belief system with this training. Is we don't think it should cost you a lot. This is information that essentially is for free. It's all out there in the public. It's just a matter of locating it and trying to figure it all out, which is what we did when we created the program. So, yeah, I think if you're looking at any other ways to get involved in training, they're big on selling you into that dream. The idea that you're going to make a lot of money with this, but they're usually pretty short on actual training or help. And what it really comes down to, anyways, it's really going to come down to you in the end, anyway. It ultimately is going to come down to you going out there and taking some of those first steps and buying things and getting over that initial fear and getting comfortable with the process and duplicating it again over and over again. And so
yeah, I mean, we've worked with every different type of investor out there, and really what separates the successful investor doesn't have anything to do with money. It doesn't have anything to do with income or where they're from or anything like that. Really, it comes with something within, because we've had people that have been very successful and have tons of money that can't pull the trigger, and then we've had people that are maybe a single mother struggling, but is able to take part of her income each month and put it toward tax deeds, and was able to pick up a property, and essentially was able to continue to repeat the process. So really, it's something that we're going to be able to provide you all of the training, all of the lists, the materials to go out there and do it. Really, it's going to be a matter of the investor going out there and actually doing it to take, to create the success.
One of these questions is, how does your information compare to other services in terms of counties covered? I would say our service probably fares pretty well compared to anybody else, because we don't get our lists from somebody else. We get our lists ourselves. In other words, we go out and get our lists every month, and so we have a lot of lists, I think, that maybe other places don't. I don't know, Steve. What's your perspective on how
Yeah.
how it covers compared to other counties?
I mean, I think that it's as good as anything you're going to find. And when it comes to a tax sale list, I mean, there's different companies out there that you have to pay additional money for these enhanced list and things like that. And to us, that's always been a little bit of a joke because, before the auction, that list is going to get whittled down and whittled down. And essentially, you're just looking to find specific properties. And so when we're going out there and we're essentially locating all of the tax sale list, emailing all of these different counties, and we also have 15 years worth of extended relationships and all of these lists and essentially on the email list where they send us out information. So we're going to have as many lists that are available, not only auction but over the counter list as any of the other services out there. There's a lot of services that are going to charge a lot more, and you could pay for these enhanced lists and things like that. But to us, it's just been a little bit of a joke because why spend $300 for a list that has enhanced when you only have 50 or 100 properties on the list? You can go through and research those properties and narrow down which properties you want based off of our different buying strategies. When we talk about bracketing, tax liens, and deeds, and the quick glance method of reviewing a list, going through and reviewing a list like that, you're going to be able to do your own amount of research. And so we're looking at these lists ourselves because we're going throughout the country and trying to buy properties throughout the country. That's really kind of what we're focusing on over the next 6 months, a year. And so we're going to be getting all of those lists. We're going to be putting them up on the website.
Yeah, I think that is ultimately what drives our list collection, are the lists that we're trying to look through and to go over. And so, yeah, I think if you're looking for a way to get lists and get training, I don't think you'll find anything cheaper. And also, it's a month-to-month service. There's no contract or anything, so you could literally sign up for 1 month and download all the training and everything, and it would be a crazy value because there's so much there. But the month-to-month amount is not really high enough. I think if you're serious about the investing, it's worth it alone just to have the lists. But then also the training and things we can offer, I think, are pretty helpful too. So
Yeah, I mean,
we'll send out.
we have members that just stick around with us just because of the list or just because of the weekly webinars, because each week we're talking about upcoming events and upcoming trainings and upcoming auctions and going through and looking at properties. So, there's lots of different tools on the website. That's one thing about the website, is there's all kinds of different tools on there. Some are less utilized than others, but there's a ton of training. You could spend hours and hours and hours just going through our training videos or going through and reviewing the news that we have about upcoming tax sales or whatever it is. There's going to be a ton of information available for you.
Yeah, absolutely. We take the training side of this pretty seriously. It's what we enjoy. We enjoy teaching people about it. But at the same time, though, we also need to make money, and we found that we enjoy making more with the property, and then I guess we know how to find the property. It's easier for us to do that than it is to try to find different ways to bring people to the site. So we figure we just try to produce the site and make it the best we can. Make sure that it has a lot of stuff available there, so the people that are looking can find it and can also figure out how tax sale investing works. I don't think you have to spend thousands of dollars to figure it out. So I think with that being said, I think we've pretty well covered everything. We'll work on getting the link set up and sent out to everybody here shortly, so that you've got that sign up link if you're interested. You can also email us any questions that you have. You can reach me at Shade, SHADE, at taxsalesupport.com, or the same with Stephen, STEPHEN, at taxsalesupport.com. You can reach us if you have any questions at all. We'll also get the replay of this up and available if anybody wants to see replays of that. So keep an eye out for that. Aside from that, I just want to thank everybody for joining us today. We always appreciate it.
Yeah, absolutely. We hope to see you out at the tax sale.
Yeah, absolutely. We'll keep an eye out for any of those emails. Everybody have a great Saturday. We'll see you.